everybody. Happy Halloween. Well, it's a day before Halloween, but close enough. I thought I'd do something a little bit different on my blog today. Instead of writing a lengthy post with my weekly analysis, I thought I would try doing a video looking at a few of the pairs anyway, just to give my take on things. Obviously, this is not trading advice. It's for informational purposes only and entertainment. You should consult with your own expert before making trading decisions. Now that I've gotten that out of the way, so let's start with the British pound US dollar. We're looking at a weekly chart here. I do use a few moving averages. I really like the way Nikos Myrmegas, he's a Forex trader. If you do a search for him on YouTube, he's got a lot of great videos. His trading method's called Spartan trading. He's got some great free content on YouTube. Check it out. But I really like the way he approaches the market, and I've sort of been adopting his style lately. So what we have here, this brown moving average, it's a 633 exponential moving average, and this is a 200 exponential moving average. The red is a 36 EMA, and the blue is a 12 EMA. We're not actually using these EMAs to make any trading decisions per se, but they're a very useful tool in just helping us identify certain zones and just to assist us with our overall trading decision and assessment of what's going on in the market. So as you can see, the British pound US dollar, it's been in a nice downtrend for many months now. The 12 EMA is below the 36. We'll just draw a quick trend line here. There's many ways to draw trend lines, but as Nikos suggests, as long as you're touching at least three major spots, it's usually a good trend line. And the angle may change as the trend progresses as well. You can see the angle is a lot steeper now on this downtrend in British pound US dollar. We're going to redraw it once we drop down to the daily anyway here, but just the overall idea with the weekly is you're getting a sense of where the market's been heading, and obviously it's heading down here. So we're really only interested in short trades unless the daily starts telling us something different. You can see these yellow support and resistance lines that I've drawn. We usually like to draw those from the weekly as well, because if you're picking support and resistance areas from the weekly, you can be pretty sure that those are very significant levels. Price is usually going to respect those in one way or another, and so these are important levels to keep an eye on as price approaches them. So that's why we mark those out. Let's drop down to the daily. So you can see that we're still, even on the daily, obviously we're still on a nice downtrend. Price has been consolidating the last 2 weeks or so. I'm suspecting it probably has a lot to do with the U.S. election coming up too. Buyers and sellers really don't want to take any risks on where price is going to be going for the moment. But let's just throw in a trend line here. If we start it up here even, we can get a bit of an idea of where we're headed. Okay, so again, adopting Nikos Myrmegas's Spartan trader style of trading. Basically, if we have a downtrend on the daily, we're only going to be really looking for short trades for the most part. Right now, we're also butting up against this support area, and so not really an ideal time to be getting involved. But typically what we're looking for here is either a break below this, a significant break below this support area, and then we can be looking to get short. If you do want to take a little bit of a higher risk trade, you can also wait. If price retraces back towards the 36 EMA and this trend line, you can be looking in here for areas to get short again once price does start moving down again. So that's what I'll be looking at on this pair over the next week to see if price breaks below this support area at 1.2150, or if price does start moving back up towards the 36 EMA and the trend line, I'll be probably looking to get short if it once we get a move back down again. You can see, just backing up a little bit on my chart, the other thing I've been using is Heiken Ashi candles, and those are really great for showing changes in market sentiment. It just looks cleaner, and it kind of filters out some of the noise, and so I just prefer to use those. And that was another suggestion by Nikos Mermagas, the Spartan Trader system there. And I think it makes a lot of sense. Okay, let's take a look at Euro US dollar. Let's move up to the weekly again. So this pair has been more or less in a range for a long time now, dating back to February 2015, actually March 2015. Just sort of been stuck in this range. Again, I have my support and resistance lines, just a few of them drawn closest to price right now. Let's drop down to the daily. So there's no real trend yet on this pair, but something interesting is starting to happen, I think. You can see on the daily, if we've dropped down, prices broken below this support line. The 12 EMA is now well below the 36. We have a nice downward movement. The last week, the price did retrace back up, and it's on its way back up to this trend line that I've drawn in the 36 EMA. So I may be looking to possible shorting opportunities if price gets into this area here and then continues back down again. I may be looking to get short. Obviously, going to be keeping an eye on this support zone. Usually probably take part of my position profit off the table once it gets to this area. So again, if I'm getting in up here, I usually take 3 small positions, 2 or 3 small positions, and I'll take one off at 1-to-1 risk. And I just got to make sure that I can at least get to this support area with the 1-to-1 risk. And if not, then it's not really a good opportunity in my mind. You want to be able to at least get your 1-to-1 risk to reward before it hits a major support or resistance area. And then, the other thing you can do is let the rest of your trade, you can move to break even if you want, or not, but maybe let the other part of the trade run, because if this is the start of a nice downtrend, it's nice to have a position involved, just to ride the trend for as long as it continues. And that's the whole idea between that's basically the whole premise of the Spartan trading method is, you're taking small closing part of your positions, getting 1-to-1 or 1-to-2, but then letting the last part of your position potentially run for a long time. And that's where you're going to make most of your profits, is when you can catch those trends and ride them out. So for example, let's just take a look at British pound US dollar again. If you had gotten in even up here, and left one of your positions open, you'd be sitting at almost 1,000 pips already. So you can see the power of trading like that with the trend. And so if you're letting a position run like that, what the Spartan Trader system, what he recommends is to just you can trail your stop along the swing highs or the swing lows, depending if it's an uptrend or a downtrend. So for example, in this trend, your stop would probably move to here by now, and then the next time you get a nice swing, you can move your stop above that above the new swing high. And that keeps you in the trend for as long as it continues. And some of these trends can go on for months or years. So it's a really great way to trade, I think. Let's look at one more pair. I don't want to make this video too long. Let's take a look at the US dollar, Japanese yen. Okay, so we're on the weekly chart. Again, it's been in a nice downtrend for quite a while. Sorry about that. This computer does that every once in a while. Okay, sorry about that. It's been a nice downtrend for quite a while, quite a few months. 12 EMA is well below the 36. Got my trend line drawn here. You can see price has the last few weeks, though there's been a small change in trend direction. It's been retracing on the weekly. So on the weekly, it's really just a retrace of the main trend, heading back up towards this trend line and the 36 EMA. If we drop down to the daily, this is going to look more like a trend change, though. So let me just draw. I'll get rid of this main trend line here for a second. It's not confusing. We can draw the trend line several ways, but just get the most recent representation here. So wasn't a nice downtrend, but on the daily you can see that things have been changing a little bit. Price has broken the main trend line. The 12 EMA has crossed the 36, heading back up. And so, I mean, personally, I don't really like to trade against the main trend on the weekly, but you can. Like, some of these retraces on the daily can be quite substantial, because if we're looking, say for example, back on the weekly here, a retrace, back up to the 36 EMA area, that's over 500 pips. So, that can be traded. So if you get a break of the main trend line on the daily, and price seems like it's going to make a nice retrace back up. Again, you wait for the break of the trend line. Moving averages have switched directions, and then you wait for another higher low, and then price to again move back upward. So, if you were going to trade this way, a place you can get in here would be. So we call this. I don't want to throw too much information at you here, but we call this the 1, 2, 3. So basically, the main direction, price is moving. The main direction, price is moving right now. Okay, and there's a retrace. So this is the 1, 2, retrace, 3. If you get a nice clear break above the retrace, so here, this could be a spot that you can get in long. Your stop would be placed below the most recent swing low. So you're looking at about, you want to go maybe 15-20 pips below the low here. So you're looking at about 130 pip stop. And then you can potentially target those areas on the weekly where the trend line and the 36 EMA is. I should have kept that marked here, but I'll mark it. You can be targeting somewhere in these areas here, right? Okay, so how much room does that give us here? So if you're looking at 120 pip stop, you might even be able to get, if you're taking 3 small positions, you'll get your 1-to-1. You can almost get a 2-to-1, just about a 2-to-1. I probably wouldn't even leave a third position. Well, maybe I would. If you leave the third position open, there's a chance that this can just keep on going, and the weekly trend could change here too. So if you leave that third position open, trailing your stop, you're still going to have a bit of profit, even if it does turn around and it comes back down to the main direction of the weekly trend. So just some trading ideas. Hope this video hasn't been too confusing. My first stab at it, and I'm just starting to learn this Spartan system myself, and I really like it. Big believer in trend trading and trading off the longer time frame charts. So yeah, check his stuff out. He's on YouTube. I believe his website is, I'll take a look here. www.spartantraderfx.com. So it's worth taking a look at that. And again, he's got a bunch of videos on YouTube as well. So check that out. So hope this has been helpful. Have a great Halloween, and I hope to do more of these videos, maybe even one next Sunday. Bye for now.